Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. Today, we're going to be taking a look at the Magnificent Seven stocks, as well as stock earning reports this week and other indexes as well. Let's start off with the Fear and Greed Index on CNN. Fear and greed, we are up in greed, formerly up in extreme greed not too long ago, but still very much up there. And in pie vesting, we are up back up into extreme greed as well. So 76 and higher. Really, if we're any bit above 50, then things are running pretty good. So going to the charts, let's first take a look at the S&P 500 and zoom in and look at how many weeks we've been green for. Really, since October, late October of last year, we had this one little correction here in January, but this overall move in the S&P 500 has gone up 27%, which is huge. That's quite incredible. So to go all the way from 41.33 up near 5,300 now is pretty darn good. So something you guys may have seen in the news lately is that the Fed Chairman Jerome Powell was talking about how they are looking to do some rate cuts starting this year. They're looking at doing 3 rate cuts. And while that may seem bullish for the market, a couple of things to keep in mind is that last times that the Fed have cut rates, we can take a look at these red lines. That's the first time they cut rates after holding them higher for longer. We typically get a crash or a recession not too much later. So great financial crisis for first rate cut, again, that red line, and then it goes down. The white line right there, the white lines that I marked on here was when we had peak inflation. So sometimes inflation peaks with the market, other times it can be signaling that a bottom is coming or is near. So you can see here pretty close to the top in 2007. And then when rates were cut in 2000, at the end of 2000, you can see we bottomed later. And the other thing to know with these rate cuts is it also coincided pretty closely to where the yield curve, no, that's the unemployment rate, sorry, where the yield curve uninverted. So this metric, this takes a look at the 10-year, the 2-year, the different bond yields, and it inverts when rates go up. That's a simplified way of putting it. But once it uninverts and crosses above this zero line, typically a recession and a downtime in the market's coming later because this is a lagging indicator. When they keep rates high for a long time, the true effects of that won't be felt in the economy right away, at least for a little bit. So when we did uninvert in 2001, you can see that was January, and when we uninverted in '07, that was July. That coincided pretty closely with the rate cuts as well. So you can see August of '07, that's when the first rate was cut, and December of 2000. So almost like to the exact month. And we talked about July, just within a month there. And going back, you guys might be curious, what did this look like in the 70s? Everyone's always talking about inflation in the 70s, how it had that triple peak and everything. So if we take a look at when the inflation peaked, again, those are those white lines. You can see the bottoms were pretty close. This one, it went up later. You do have these rate cuts, these red lines when they cut rates after holding them high for a little bit. Sometimes it would go down, be near the bottom, go down later. So this was the 70s. It was kind of a mess. There was this time here where that was in 84, and really we just ran up and didn't see a correction until that flash crash of 87. So just something to keep in mind. When we take a look at the volatility index, the volatility of the markets is still low. So nothing to be too worried about there. Let's put it on the weekly. So it is trending up and these waves are getting bigger. And if you ever see the spike above 30, those might signal local bottoms. As well, another index or indicator you could take a look at is the volatility divided by the VVIX, the volatility of the VIX. And when it is low and bottom right here, those tend to be highs in the market, and when it is peaking up here, those tend to be lows in the market for the S&P. We've looked at unemployment not long ago. It is trending up, something to keep in mind, but also these typically don't spike until we are in the recession. So this can be some smoke before there is fire. Just something to be aware of. And as far as the Dow, I have these wonderful trend lines drawn. I sort of drew my own channel here, connecting some former tops. And I am wondering if the Dow is going to get, let's zoom this down a little bit, get somewhere near this top of 42,000, and maybe it's going to curl back down. And I would be eyeing this level right here if we did have a big market correction, as well as with the S&P. You saw how I drew this channel in here. Let's put that on automatic. And this was a big correction in COVID. So this level here, you're talking about mid low 4,000s, but we could take a look. If we went out to June, July, I have this on July because I'm expecting rate cuts then. Remember, after they cut rates in 2007, and after the yield curve inverted, it was about 20 months to 24 months when the true bottom was. And so that would be putting us from July of 24 out to July of 2026. And July of 26 is right out here. We can even go a little bit before, do 20 months. And a 27% drop off here would put us in the high 3,000s if it were to drop off from right where we're at. But if we had something big like a 40 or even 50% correction, it might put us down at these levels over here. And I am wondering if that is going to happen. We might still go higher, but the quicker and higher we go, the more I feel that a 50% drop wouldn't be too shocking with how much we're moving up. So maybe the S&P does get to somewhere like the 55 to 5,700 range rate cuts, and we slowly start falling off. Who knows? Maybe this time's different and that doesn't happen. So just something to keep in mind. If I had to guess, not financial advice, but if I had to guess, with the way that some of these stocks and especially crypto has been running so hot, that if we are peaking and some stocks are just going parabolic before they cut rates, I'm probably looking at taking some profits. So let's take a look at some of the Magnificent Seven stocks, and let's start off with NVIDIA. So with NVIDIA, let's take a look at the weekly. And I drew this fib from the high to the low, and we recently tested this 3.618 near $968. If we zoom in on the month and show you guys, you can see we pretty much got right to it, came down, and it looks like we are going to be challenging it again. So we'll see if it keeps bouncing or if it eventually breaks through. That kind of happened last time as well at this extended fib level. Got through, stayed right on top of it, sold off, and then bam, burst through. And then up we went. So we went from this 730 level to the 960 level, or even lower in the high 600s from February to March. Guys, that is not typical. It is not typical for a stock, albeit one of the Magnificent Seven stocks, to move up 45% that quickly. Usually in an average healthy year, and I'll show you this with something like Microsoft or Amazon, you're looking at 20 to 80% gains. However, with NVIDIA, because we know how much it's attached to this whole AI narrative, it has just been rocketing up. A lot of people are probably looking for 1,000, that psychological level. I could see it getting to this 4236 at 1114. Could it get above that? Sure, we'll see. But if you bought NVIDIA down here as recently as October 22, and inside of 2 years, you are really 10xing your profits, if not more, I would be hard pressed not to take some profits at least. But we'll see. Maybe NVIDIA is going to do a stock split. Right now, it has a market cap of 2.36 trillion. So it is starting to challenge the big two, Microsoft with a 3.2 trillion market cap and Apple with a $2.66 trillion market cap. So Next, let's take a look at Microsoft. And something I wanted you guys to see is, if we just go to anywhere in here when this was having a steady climb, let's find a date in January. So we can just go January to January. So here we were at 63, and to the end of the year, we were about 40% up. Okay, look at that. I love this chart. If the stock I'm in does this every year, I'm very happy. And likewise, if we go just there to there, 30%. Okay, from now we had a little bit of a correction here, but heck, I can even give you what happens after 45%. Sure. So to me, that is average growth in a stock. Again, that's why if anything you hold, whether it be a stock or crypto, is doing a 10x inside of a year or two, it's okay to take profits. And oh, last thing before I forget on NVIDIA. Am I buying NVIDIA? No, I am not, because we are still green. We haven't had any corrections in a while. We haven't even been going down to these fib levels or the moving averages. So Microsoft, same thing. We're getting up near this level. It's right around 435, which is at the 1.618. So a level to look out for, and we'll see what it does from there. Next, let's go to Apple, and Apple has bounced down to the 618 yet again, and it is in a monthly and a weekly sell-off. So it's at this fib right here, and historically Apple doesn't get under the 50 in the RSI too often. It's really once every other year. So not a bad time to buy Apple. And if we take a look at some moving averages and see if any are close, this is the 100 moving average. Okay, you can see here we have this doji candle and we're staying above the 618. Do we get anything different in the daily? Well, you can see on the daily we're just kind of staying down at these levels. So maybe it is possible we stay here and go up. However, you take a look at this trend over here, and I do wonder if maybe it's possible we return to it. So if I'll try to be generous and just kind of draw from the bodies right there of those candles. I do wonder if it's possible Apple goes down to something like a 155 level. So that would take it underneath the daily moving average. However, you can see here on the weekly, let me brighten this up. So I'll take this, and I change this, and sometimes it just goes back. So this trend line, maybe it's going to come back down to the 200. As far as I'm concerned, guys, most of the Magnificent Seven stocks, at least for me personally, outside of Tesla, if it is at or under the 200, I am looking to buy, because that is very rare. You can even take a look at the 100 on the weekly. Take a look at how often we've been there for Apple. Sometimes it will go a while until we are, and the 200 is a very strong area of support. So Apple stock, I wouldn't blame you for buying some right now. I do think that you would be getting some good value. However, if you're looking to be more patient, you might wait for a turnaround, a green buy signal, something like that, just in case it doesn't fall further through that 100. But if you were to dollar cost average here, I wouldn't blame you. Next, let's take a look at Amazon. This one's bullish, and like NVIDIA, like the S&P, like Bitcoin, really it's just been running since November. So Amazon, next level up here is its prior all-time high, which it made in July of 21. So Amazon probably going to test its prior all-time high, and past there, the 1618 is 255 with a market cap of 1.86 trillion. So that's Amazon for you. Google, you can see that I drew this fib here from the, did I draw it? Oh, I just drew it from low to high here. Let's redo this. And if I go from a high, I'll go from this high right here, try to get as close as I can to the next low. Yeah, we got above that all-time high there. So right here, Google had a little bit of a sell-off and bounced nicely off the 50 moving average as well as that top fib right there, and is looking to possibly break into new all-time highs and stay there. So the next fib extension, the 1618, is all the way up at 220. So Google right now looking good. It has a green weekly buy signal. It has $1.88 trillion market cap. And again, the fact that this is green is pretty good. So if you were able to get in Google anywhere in these levels, congratulations. Meta looking bullish. Next level to go up would be, let's zoom this down a little bit. Next fib level's around 566. So Meta looking strong as well. I like taking a look at AMD because it's another very strong stock. And what do we have here? So I just drew this from the low to the high, and yeah, looks like it's come back down to this 382. So maybe this is good structure right here. I would expect it to stay there. We have the 10 moving average and the body of the candles above it. But if it did get some weakness, then maybe it gets to these 20 moving averages over here. We have the 50 all the way down here at the 618 fib, again from low to high. And here are some others if we get very, very bearish. So let's take a look at some earnings reports and see if there's any stocks I like and use. And if you see any earnings reports for stocks that you like, or if you want me to ever take a look at any stocks you're into or cryptos, let me know. Comment below. I'd be more than happy to take a look at those and just do some charting. So really nothing that I see there that I'm into. Let's move back in time. We have Nike. We'll take a look at Nike. Now, funny I see FedEx here. Guys, two of my personal rules when I buy stocks is I want it to be something I like and something I use. FedEx, do I use them? Yeah, because I have no choice. People will ship things to me, FedEx, whether it's through Amazon or whatever. However, it's not a company I like, so I would never invest into it. I am curious because I think their service is pretty much garbage, and I have constant issues with them. How their stocks looking. So if we move around, my God, what is going on here? So, pretty volatile. Yeah, I wouldn't be buying FedEx personally, but if you like FedEx, it's got a $71 billion market cap. It's very green. Personally, I wouldn't touch it. Back to the earnings reports. What was the one I want to look at? Yeah, Nike, NKE. I am curious about Nike. I don't know about you guys, but for me, I always have somewhat of a hard time buying stocks into clothing companies because I don't know, it just feels like it's such a trendy type of business and other companies can come and go real quick. I know Nike's the best, but when it comes to clothing companies, I'm like ultra careful. You can see here that we have kind of this wedge forming from these peaked tops. You can even go back here, going this way, and then from the bottoms as well. And yeah, I wonder if we're going to be coiling in here. So if we draw a fib from the high to the low, and I want to make sure this is on the log as well because we're not in all-time highs. Yeah, it is on the log. So you can see here we're underneath that 236. It's very bearish, and Nike has a market cap of 142 billion. Was as high as 178 up here. So Nike, it's fallen a bit, and from its high up here, which was in 21, a lot of stocks ran hot in 21. It's fallen 48%. So maybe not the worst place to get some value for Nike. However, as it's coiling in here, I do wonder if it's going to go down or up. Usually when I see that, one of those two are a possibility. And yeah, you can see right here kind of these wedge forming from the tops and the bottoms, and it goes down. And yeah, this is a great financial crisis. This was the dot-com crash. However, you'll note that Nike started the fall way before we had that true bottom. So it was falling before a lot of the internet tech stocks were falling. So maybe Nike's showing us there's some overall weakness in the market just by being a clothing company. Just something to watch. But hey, if you bought Nike here, it's had some long term value recently. I would wait to see the sell signal play out and just taking a look at the monthly. Yeah, we have a monthly sell signal, and I would wait for a turnaround on the weekly at the very least. Let's move on. Any others I'm interested in here? I know some people like Lululemon, and obviously this is descending by market cap. And, again, sometimes we don't think of the earnings reports, but this can have a big effect on the price up or down. And so take a look. And again, try to be patient. Don't chase. Maybe you can just look at buying your stock if it's a strong one when the moving average is underneath the 100 week or something like that. So we have Chewy. Let's take a look at Chewy. Chewy, General Mills, Micron. I'm curious about Chewy. So CHWY. Chewy. And guys, this for me personally is just one way that I look at stocks and like to look at stocks just to kind of get an idea. So Chewy, man, this thing was a darling after the COVID crash. And, when it comes to IPOs, I try not to buy for a year or two because of this right here. We can see dumps. And you can see after that was before the COVID crash. So COVID crash was March. But when we had all that liquidity injected in the stimulus checks, man, Chewy went up to 120 and is now just falling, and is at 16.62. So right now this is a falling knife and is just going further and further down. If we take a look at a fib, might throw on the RSI here as well. If you take a look at a fib, these would be some levels to get to. We are way underneath those moving averages, and I'm sure the RSI is showing that we are very oversold as well. So do some research if you like and use Chewy. I mean, I like them. I use them. Do some research. See if maybe you might have some deep value you can get into. Just taking a look at Chewy here, at least on the weekly, something I do want to see is a higher low. Right now we're just making lower lows. Look at what a trap this is. Here we'd be getting higher lows. Maybe you waited for confirmation right here, and then it went higher, and you're like, great, I got Chewy at 34. I bought the bottom, went up to 50, and then it gets back down to those prior levels. You're like, great, I'll buy some more, and then boom. I mean, that sucks right there. So, RSI, when these stocks are falling like this, I like to take a big zoom out. And, down here, you can see on the monthly RSI, it does look like it's kind of starting to curl up. So the price is lower, and it's possible that the bottom of the RSI right there is that it's getting higher. It's hard to show because it keeps popping up on here. So we are slightly getting higher. So maybe some bullish divergence on the RSI. Let's take a look at Micron. Hear about that one a lot. And we are at an all-time high, and this one's doing pretty good. So if you like Micron, I wouldn't buy it now. Again, I'd throw on those moving averages and see, when it hits the 50, 100, and something like that. Micron has a market cap of 122 billion. What was the other one I said? General Mills. That's what it was. Here we go. General Mills. It's sometimes we forget about stocks of common everyday products we use, and it's good to take a look once in a while. So General Mills, here, look at that. It popped in May of 23, got up to these 90 levels, and sold off real well, 33%. A lot of accumulation down there, and then finally, boom, has popped off. So if you got any General Mills down here, nice move. This is good accumulation. Remember what I was talking about before, higher lows? Overall higher lows, never got back underneath there. So, yeah, that looks like good accumulation. And $39 billion company. So we're not really this oversold that often. Last time was in 2018. So maybe you caught General Mills at a really good price, and I hope one of you guys did. Any others that I see? Not really. Let's go to Tuesday and Monday of last week, see if there's any others that I recognize, products I like and use. And Monday, let's see. Not seeing any others. This is a mining stock. I do Bitcoin mining stocks videos. I try to do those every Wednesday. So do try to catch those. Might be some good value in some Bitcoin miners, possibly. So, yeah, that's all we have for today. I'm curious about what earnings reports we have next week. Any big ones showing up? So we have, just some GameStop. Remember that one? Hard to believe this one still has that big of a market cap. It's turned into such a meme product. And Carnival, Cintas. Man, you see Cintas everywhere. I might take a look at that one here to end the video. Walgreens and MSM. Let's see. Hut, that's another mining stock right here. The Hut 8 Corp. I believe that's the one that has some legal troubles. So, and yeah. All right. Walgreens and CTOS are two big ones next week. Let's take a look at where those are at. WBA. And woo, Walgreens falling hard. So we take a look at this one. Man, this one, how long has it been falling for? My God. So Walgreens, man, is as high as 93. And look at this. We are all the way down at 20. You could say, well, we have a higher low, I guess. But man, this one has just bled so hard. If we measure that out, this thing's fallen like 80 some percent, and its market cap is 17.75 billion. So do your research on Walgreens. Maybe you can find some deep value. You can see this was post Great Financial Crisis, October of '08, March of '09. We're at those same levels. So I haven't been keeping in touch with Walgreens, but man, we are at levels not since before the dot-com bubble crash and the great financial crisis crash. So, wow, Walgreens fallen pretty hard, and yeah, that's not good. I'm sure there's equally not good things in the news about Walgreens too. But do your research. You might have some amazing long-term value on Walgreens. But again, don't just buy all because it's low. This might just be exactly what it looks like, a giant piece of crap that maybe CVS is replacing. I don't know. I don't know enough about it, but you guys could research and maybe find an opportunity here. And the other one I talked about, I want to make sure I get the name right, Cintas, CTAS. I see their company everywhere. And man, what a strong looking stock since the great financial crisis and the dot-com bubble. Look at this thing. It is just, you would have loved to get into a stock like this and just ride this up 2,700%. That is a healthy looking stock right there. Just up. Looks like a Microsoft. You can see here we do have bearish divergence because the RSI is peaking lower and lower. Here it kind of broke that trend a little bit, and yeah, we'll see. Maybe this one will stock split because of the price. Has a $65 billion market cap, so Cintas, hey, looking pretty good on the weekly. Man, look at this. Late October, it looks exactly like Nvidia and Bitcoin and many of the strongest stocks and things out there. So this one looking very bullish. If after rate cuts things start to look very bearish, that's when I'll look at the RSI, see if we're below 50, if we are double tapping the oversold area of the RSI, if we're very low on the fear index, below 50, below 40, below 30. things like that. And if we're at the moving averages at or under the moving averages of like the 100 and the 200. So, for example, let's say we did get a recession later this year, next year. Okay. If good stocks I like and use that look very strong and rarely ever go under the 100, and you can see how strong that 200 is. If there are any strong stocks you see getting under this 100 to the 200, then hey, that can be a great opportunity. So just something to keep in mind. Guys, I hope you enjoy this video. I know some of you are probably only coming here for the crypto videos, my outlooks on Bitcoin, the Bitcoin miners, the altcoins available on Robinhood and Coinbase. I do think it's important to look at stocks because Bitcoin is just so volatile. And so for me personally, if I get some really good profits from crypto, I like to roll those in when it's a good time into stocks so that money works for me forever. And, until that time, maybe I take some profits before it near the peak and before things correct if I'm lucky. And if I'm able to do that, I can put that money into a CD or something. Let it work for me. Dollar cost average in when stocks are going down and try to play it like that. So hope you guys enjoyed the video. Hope you all had a wonderful week and that you have an even more wonderful and amazing weekend. Thank you guys for watching. Appreciate all the support. Happy to do this for free. This is just part of how I take a look at technical analysis for myself in stocks and crypto. And I'm just trying to share and spread some of that knowledge to you guys because I've been able to use my knowledge that I have working, consulting, being certified in the field of psychology for the last 10 years. I've been able to use that to my advantage with stocks, especially with fear and greed and things oversold and looking at the charts in some simple ways. I try to take stress out of the charts. I always try to speak in a way that reduces stress and helps simplify things for people. And when it comes to the field of psychology and the financial field, there is so much that's so complicated. And I do my best. I try to pride myself on simplifying things and just making the information seem more understandable. So if you have any questions about anything related to stocks, finances, just the fear and greed index, things like that, please post in the comments below. So take care, everyone. Bye-bye.